It's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about the September yield max payouts. So on this channel, we have a very important strategy here. And what we do is we borrow money. So I have $188,000 in foundational holdings. And what I do is I borrow against this $188,000. So I have $60,000 borrowed. And so what I do is I invest in high quality holdings, high quality foundational holdings like the S&P 500, SHD, and Tesla. And what I do is I borrow money to invest in these things called income funds. And one of the criteria is to invest in income funds that pay over 25% a year in distributions. So the two that I own are AMZY and TSLY. TSLY pays out 78% a year. AMZY pays out 42% a year. And so on my September 9th, I got paid out $2,446.65. The moment that this hits my Robinhood account, it goes into four separate categories here. The first category, it goes into expenses, which comes out $317.58. I am in the 30% tax bracket, so you always have to pay Uncle Sam, and the government, U.S. government will always get their tax money, so I set money aside for taxes. However, in these covered call income funds, it's return of capital. So the last time I filed my taxes, 80% of the distributions paid out was return of capital. So I have a conservative number here. I just do 30% of anything paid out. And then when it comes tax time, I pay my taxes. If there's anything left over, then I will use that money to reinvest. Then the next 25% of this money gets reinvested, half into like the S&P 500, my core foundational holdings, and the other half into income funds. So I did some mathematics, and if you reinvest 25% back into these funds, you will have a growing portfolio as well as a growing stream of income. So that 25% comes out to $611.66. And what I do is I split that down the middle, and half of that goes paid out to the core foundational holdings of SPY and SCHD. And I'm just going to shout out to Whiskey Danger. You talked some sense into me. I was investing in the total international market, and you pretty much said that it just underperforms. It's not a really good holding. And then I really went down the rabbit hole into like SHD, and SPY and SHD are really good complements of each other. SPY invests in like the top 10 highest market cap weighted companies. So think of like Google, Facebook, Tesla, Nvidia, Amazon. They invest like the higher market cap weighting towards that. Whereas SHD is like more dividend focused, and they invest in large cap companies, but then there's smaller caps, so they'll be investing in the not highest market weighted one. So they have like a select criteria, and this would be like a really good complement to a portfolio of core foundational holdings of these two. And then the two income holdings I have are AMZY and TSLY, which is part of the income stream or the income engine of my portfolio. And then the final thing is I will have some money left over. Ultimately, you can use this money to pay bills, take your girl on a date, whatever it is. However, what I do is, because I really don't need that money and I want to reinvest that money, so it ends up, I just split it 50-50, so like half of it into these income funds and the other half into this. So obviously, whenever you have a strategy, like you have to have some sort of goals to measure towards. One of those goals for me is to make these income funds and just borrowing the money to be my income engine to the portfolio. My wife and I decided that we are going to contribute more to our 401k, and that we are not going to put any more money into this brokerage account. We decided that the tax advantages of the 401k or 403b are more important than putting money into this account. So therefore, this borrowed money will generate its own income into this account. So this is the engine, this is the W2 for this account. And then the other thing is derivatives to assets. What does this mean? So if you really break it down, option investing, you're investing in derivatives. Derivatives are fake. It's man-made. It's like they don't exist. It's like paper money that, you know, people are like buying and selling insurances to each other. So what I want to do is I want to take this derivative money and translate it to real assets. So when I do my reinvestment of 25%, I'm splitting half of it into core foundational holdings. That like switching from the derivatives to assets, like when you own an S&P 500 or the SHD, you're actually owning real companies that produce products, and like that derivatives which is fake, is being transitioned to something that is real. So that's like one of the goals here, which I am, if you were monitoring my progress, like you would see a check mark. I've been gaining a good amount of money like the SPY and SHD, and then we're borrowing other people's money. So where did I borrow the margin on this account? It's not my money that I'm borrowing, it's someone else's. So we're borrowing other people's money, and that's how we're getting ahead and building the side stream of income. So right now we're being like super conservative. So the goal here is also to, if it's really producing a decent amount of income, is to scale. Right now, I only have $60,000 borrowed. My total portfolio is $188,000. So I can borrow a lot more money. However, I am not doing that immediately because I feel like I'm in a really good spot right now. Like we can see good payments with it, but I also want to build a cushion into those SCHD and SCHY positions for the next couple of months. And then, if things are looking good, then I will probably borrow some more money. And I believe my next move will be into XDTE. It's proven to maintain its net asset value, but then also pays over a 25% dividend. So, and it's a weekly payer, so it has a lot of positives towards it. I used to own XDTE, but the NAV erosion for that one was a little bit higher, but the distribution was higher. But I think I want something a little bit more stable. So like when investing into the XDTE, I think that's what I'm looking for. And then finally, like we're investing in income funds that maintain NAV. So like that's, invest in the XDTE. Tesla hasn't maintained its net asset value. However, it's overall down throughout the year. And I'm sure once it actually breaks over the point where it's been down, like I will be in the positive for it, but it is what it is. And then as soon as Tesla starts getting positive, then Amazon goes negative. So it is what it is. Like I've been on this roller coaster journey for some time, investing in Tesla, which again is the majority of my position, but I am trying to divest that. All right. But these are the goals. And now let's go to the actual Robinhood portfolio. So again, I'm never going to tell you something that I'm not doing myself. So you can see that this is my position, $187,352. I believe it's like the 24-hour market. It's 903 right now. But the bulk of my portfolio is in Tesla. And then I am, again, with the income produced from these, I'm investing into the SPY as well as the SCHD. Let's talk about the things that I like to talk about here. So let's actually, before I get here, let's just talk about our performance. So you have a 1 day performance, we're up 5%, 1 week performance, we're up 8.48%, 1 month, 17%, 3 month, 30%, year to date, still down 10.9, 1 year, 18%, all time, I think I'm down 22%. So the max my portfolio I've ever has been $286,000. So, we're still down overall, but in the long run, I did build a massive concentrated position in Tesla, and I just stuck with like SPY and SHD. Could have been a little bit higher because of the distributions and things growing like a lot slower. I could have, but I believe Tesla is a really good company moving forward. However, I feel like I have a big enough position where I don't need to add to this anymore. Like we're just going to ride this out and just see what happens in the next 10 years. However, with the income generated for this, I am putting my money into these, which are like those real assets. And then these two are the positions that I'm borrowing. Again, so, okay, we talked about the overall performance. Now let's talk about our margin status. So margin status here, we're low risk. We have a 62% buffer, which comes out to $117,000. So my portfolio would have to drop $117,000 for me to have to start selling some of my assets to pay for the margin. So let's go to the AMZY. Actually, let's just go to the history. I think that'll make it easier. So you can see my two payments here from dividends, search. Okay, September 9th, yield max. These are the two things. So the Tesla one, we got the confirmation. We have 1,822 shares and 1,822.36 shares, which paid out 81 cents, which gave me about $1,500. Let's close that one. Let's go to AMZY, AMZY. 1455 shares, 65 cents a share, $950. So that comes out to a total of $2,446. So that is a good chunk of money. Let's go look at some other metrics here that I like to track. Margin use. So my total margin amount is $57,000, which comes out to about 23% of my portfolio. At some point, it was 40% of my portfolio because my portfolio value was $140,000, so it was much more. And I'm willing to take out more margin, but I feel like I'm in a really good sweet spot, just like I was saying earlier. So I think we're just going to ride this out the next couple of months until tax time. I want to pay my taxes. If I have money left over, I'll reinvest that. And then at that point, I feel like I'd be more willing to make a move on possibly using some more margin. I also want to get past this election and see like what the economy is going to do and things like that. As you can see, these are my positions, still down in Tesla, still down on my TSLY yield max position, margin amount, and then margin maintenance, $70,000. All right, so now, since I got my payments, I need to do some shopping. So since we are, divesting into these different funds, so it comes out to the 2446.65 divide by, or minus $500 just set aside of money for the margin interest, divide by 2, so half into income funds, half into core foundational holdings, and then into the 2 holdings comes out to $486. So we're going to buy $486 worth of the S&P 500. Looks good by order dollars. Review, and since it's fractional shares, I'm just going to do queue the order. We're going to press buy. I don't care what the price is. Done. All right. Next thing we're buying is SCHD. Same thing, same price. We are going to buy $486 worth. Review order. We are going to queue for fractional shares because I can't afford the full shares. We're going to buy. Done. Same thing with the other two. So AMZY, 486. Review. Buy. Done. And then finally for TSLY, same thing. I'm going to reinvest $486. Review. Q fractional orders. Buy. Done. So we're going to get some good buys in for 910. All right. So we talked about a couple different metrics here. We talked about the payments. Let's just go over the sheet. We pretty much already talked about this section here, so I'm not really going to focus on that. I'm going to just focus on this upper bar here and a couple points I want to make, and then that will probably be it. Okay, so when you take the amount that I got paid out, which is $2,446.65, and you divide that by 63, comes out to 3.88%. So this last month, I got 3.88% in yield, which comes out to 46% yearly yield with an estimated income of $29,360. This is fantastic. That's a good amount of income. That is someone's minimum wage salary. So I have a minimum wage worker working in my Robinhood account, making me money and reinvesting. You can see here, margin amount, margin maintenance. So I have $60,000 borrowed. If I want to borrow $40,000 more, that would cost me about $10,000 more in margin. So that would still put me at a low margin risk, but then I would also increase my portfolio by like 40% in income. Something worth noting, but again, I'm not going to be doing that. It's just a thought exercise. The price paid, so out of all the income fund prices, it cost me $73,589.20. The actual money I use, so I have not been adding any of my own money. This is just what the funds have paid out and what I've reinvested. So this is what the price I paid has added up to. The actual amount of money I used was $63,000. And then we're going to talk about these two here in just a moment when we talk about these two. But the total income for this, I started this in 7/7/2003, so it's been about a year in 2 months, and we've made $19,000. And if you're wondering why it's so low, when I started out, I was only using like $5,000 or $10,000. Like it wasn't anything crazy. And then like slowly but surely, I was getting like more and more comfortable. And at some point, I did like $20,000. I can't remember when I did that, but then this is like when I really started deploying more capital. So this is when I did $40,000, and then 2 months later, not even 2 months later, like 30 days later, I bumped it up $20,000. So right here, I'm like a really good sweet spot. So I'm gonna ride this out with the 60K for now, but then I will probably bump it up to 100K once I build my core position so a little bit more. Okay, expenses. So all the Robinhood Gold as well as margin interest has been added here. So if you look at it, if I had to pay $2,000 to make $19,000, I'm gonna do that every single time. And theoretically, if I scale that 10 times, it'd be like $190,000 with me costing $20,000. So if that scaling would work, I mean, that's my full-time salary right there. Let's talk about the performance off price paid. So, with the money reinvested, my price paid, I'm still in the negative because my market value of my two income holdings of AMZY and TSLY is $51,000. Because I built core positions using those income funds, the TSLY and AMZY, I've built a $5,878 position investing in those. So what I do, this is part of the actual return. So this was actually negative 22,000, but then you have to add in the core value positions of SPY and SCHD because that is part of the performance, because like I'm using that money not to reinvest into the income funds, but into the side things like that also affects the performance of this overall strategy. So off the price paid, we're down. However, I don't think that's the most accurate measure. To me, it should be off of just the amount of money that I decided to invest. So $3,000 my own money, $60,000 of borrowed money. And so the true performance comes out to about minus $6,000. There's a point where I was a couple $1,000 away from breaking even. However, Tesla was finally on an uptrend, then Amazon was on an uptrend, and then all of a sudden, Tesla kept going fine, but then Amazon went down, and then that's causing the drag on performance here. So, every single time I get a win, I also take an L. But I'm a patient guy. I've been up and down with this roller coaster for years, so it's not anything new here. And then, just like I said, market value of the investment portfolio. This is the market value of the SPY, SCHD, and then this total taxes for 2024. So closer to like December, January, February. I'm just gonna set aside money as cash into those positions, and if I owe taxes, then I'll pay them. If not, then I'll reinvest it and then move on base reinvestment. So this is how much I just reinvested at that 25%, and this is what it was left over. So I've been reinvesting about like 10K in here, and you can see here my SHD and SPY positions have been growing pretty well by having these income funds that are the income engine, my W2 guy. So that is it for the video. So you saw like my margin positions producing a pretty good stream of income. But I'm divesting away from Tesla, investing in SCHD, SCHY. And yeah, hopefully this like motivates you guys to do something similar to this, or just maybe you think this is crazy and you're just going to see what happens. That is also fine too. Any thoughts, questions, definitely ask. But besides that, hope you all have a great one, and hopefully you can build a side stream of income for your family.